Hey guys, this is Aetherium Capital here, and today I will analyze ASML. So first of all, let's look at the business overview of ASML. For those of you guys who don't know, ASML is actually the monopoly in the production of lithography machines that are used to produce your semiconductors. So first of all, we have to understand what semiconductors are and why they are important. Semiconductors are basically small chips over here that are on and off. They're able to on and off and control things that are operating within your computers and your electronic devices. So all electronic devices contain semiconductor chips, and the only guys that produce machines that can actually produce them is actually ASML. So ASML is split into two businesses. The first business is what is known as the installed base management business, and your installed base management business is actually the portion of the business that maintains and operates the machines. So whenever they sell their machines to a company, they will also sign a lease agreement that actually enables them to maintain the ASML machine over a duration of time. And in fact, the retention rate of this installed base management portion of the business is actually 100% because there is no one else in the world that's able to maintain the complex machines because they do not have the knowledge and the know how. Next, the second one is what is known as system sales. So, system sales, what they do is they actually sell two types of machines. The first one is called DUV, and the other one is called EUV. So, DUV machines are machineries that are used to produce lower tier semicon chips with larger transistors. So DUVs are actually allowed to be sold to your China because they are not very advanced. However, EUV has a 100% ban, so there's no EUV machines that are able to be sold to China because it is able to produce your high-end chips such as your NVIDIA chips. Now, what you have to understand is that your DUV actually do have some competitors. You have your Nikon and your Canon. However, in the DUV market, Nikon and Canon, right, they are actually producing their chips using a slightly different method. Instead of lasers, they are using a technique that's called imprinting. So you can think of it as your stamps. So what Nikon and Canon machines does is that they actually simply stamp on the transistors onto a semicon fab. However, for your however, for your ASML DUV, they simply use lasers. So the reason why ASML is such a dominant company is because ASML's machines using the lithography method is the only one that can produce something that is known as a high yield of chips. So high yield of chips basically means that the chips are well designed and connected properly so that there are no interfaces and overlaps between the transistors. So other chips, such as produced by Nikon and Canon, these machines cannot produce the chips as effectively because there are faults, etc. So DUV are used to produce your low-end chips that can be found in your cars, whereas your EUV is used to produce the most advanced chips such as your NVIDIA and AI chips. So now let's look at ASML's competitive advantage. So the figure on the right over here, right, is actually ASML's machine. And if you look at it, the size is tremendous. And inside there are a lot of crucial and proprietary information as well as technology in it that cannot be accessed by any other company. So first of all, you have to know that this machine over here is the size of a school bus. And what it does, right, is it basically utilizes laser and hits a tiny tin of metal, a tiny droplet of metal, and causes it to produce ultraviolet rays. And extreme ultraviolet EUV machines are only produced in one country, which is where ASML is located, in Denmark. So over here, what you have to know is that there are proprietary information in these machines. And an example of this, right, will actually be your mirror that is created by Zeiss. So Zeiss over here, I'm sure most of you guys are familiar with it. It is actually a company that produces glasses. And Zeiss produce a glass specific for ASML, where the surface of the glass is extremely smooth. And if you expanded the glass that they produce to the size of Earth, the highest and the shortest the lowest and highest point on the glass will be less than 2 millimeters. So this is how flat the surface of the glass is. And you need this glass to be extremely flat so that you can actually pinpoint and shoot the laser at a precise and exact point. So this technological advantage, right, is only present in ASML, and there are many other proprietary information and technology that is present specifically for this machine over here. So now let's look at the revenue guidance that they provided. So the company actually provided a range of 44 to 60 billion by 2030. So let's do some quick calculations and predict what the stock price will be at the end of 2030. So using the lower range, $44 billion with a net margin of around 30% and an outstanding share of 390 million, this means that the EPS of the company will be around 33 euros. at the end of 2030. With a PE of 25, the stock price will be around 963 US dollars, which is around an 8% return at a price of 650 if you purchased it today. Now let's look at the upper end. The upper end will be 60 billions in revenue, and let's assume that there is a higher net margin of 32%, and the outstanding shares is also 390 million. So the earnings per share of the company will be around 49.2 euros, and with a PE of 30, the stock price will be around 1680 USD. And this represents a 21% CAGR at a price of 650 USD if you buy it today. So, lastly, the base case scenario is where ASML continues to hold its growth rate of 15% before the AI boom. And this over here, if you look at the intrinsic valuation, ASML is also buying back a lot of shares, is buying back around 1% of the outstanding shares over the first quarter of 2025, and is on track to buy back around 4% of the year. So, let's look at the scenarios that are outlined earlier. EPS, 8% a year. Let's assume there's 25% chance, which I've placed over here. The EPS growth, 23% a year, let's say it is a 10% chance as I've placed over here. And lastly, for your EPS growth of 14%, let's say there is a 65% chance instead of 60%. So keying all of these growth rates into the calculator as well as the discounted cash flow model, what you will get is that the intrinsic value of ASML is somewhere around 700 USD. So this over here basically means that if you purchase under the price of 700, you're actually getting a good value for ASML. So personally, for me, I do have quite a significant position in ASML as well, and I believe that ASML is currently quite undervalued. And the worst case scenario I can see for ASML, right, is dropping to around 300 range. And honestly, I do not think that this over here will happen because of the many secular tailwinds that ASML possesses. However, if it does reaches there, I'm actually okay with it, and I'll be adding more. So the prices that I would personally be adding, right, will be around $650. I would add again at 600. I would add again at 560, and I will load when it's around $500. So I hope you guys found this video useful and do consider subscribing.